All right, hey everybody, happy Monday. Welcome to the AAA session. This is Chris Pulver here with Gary Fichardt and Tyson Clayton. Hey everybody, let's get a quick audio-visual check if you're out there in the YouTube channel. Type in a wire yes if you can hear us. Coming through loud and clear, let us know. Tyson, Gary, say hello, fellas.
Uh, Good day, traders, and
everybody,
welcome
happy
to
Monday.
2021. It's going to be interesting.
Yeah,
It's going to
Happy
be a
New Year.
great session. We'll go ahead and take a look and see what happens to the setups that we're going to be discussing today and how it plays out this week.
Absolutely. A lot to talk about, boys. We've got a lot of movement that's going to be happening. We say it all the time, but I got to tell you, I'm really excited about 2021. It's going to be a great year.
Absolutely.
All right, let's go. Let's go ahead and make sure that everyone. I can't see the chat coming here. He says, "Okay, everything looks good." All right, fantastic. Yeah, I'm looking on my end here. It looks okay. It looks good.
Yep. So so just so everybody knows, I'm the one that's hosting. So Gary usually has it running in his studio. So what we'll do is we will bring up the charts, discuss. I'll just bring over the charts and whatever we want to take a look at. I know that I specifically wanted to look at some dollar index setups and the stock market. A lot of it involving yearly pivots. That's going to be my main focus. I'll be bringing that to my trading room this week. Gary, I know, has a couple of things he'd like to discuss. Tyson as well. We actually just chatted like 15 minutes before this, so there's actually a lot to pack into today's 30, 40-minute session. But it's going to be action-packed as always. So looking forward to it. So what do you want? What are you thinking, Gary?
All right, so let's go ahead and get started on. I'm interested to know a little bit more about cryptos right now because we've had some good movement in the cryptos. I know that we've got a few conversations around what's happening with regards to tomorrow's runoff for the Senate runoff that's taking place here in the U.S. We also have got some conversation around the Congress counting the electoral votes to finalize the election, the U.S. election. Then we've also got the non-farm payrolls coming out on Friday. So there's a lot of data coming out this week that we're going to go ahead and discuss. Also want to throw in Brexit. I know that we were waiting for details to come through last year. We know that there was an extension on Brexit because they were still in negotiations. But they did officially leave the UN. Britain left the UN, and it was confirmed last year. But we're going to go ahead into conversation around that as well. So let's first start off with the cryptos right now. And Tyson, I'm going to hand it over to you. Just give us some insight of not just we're all aware of what's happening with Bitcoin and Ethereum. Great moves out of that. But is there something else that maybe students should be keeping their eye on?
Yeah, absolutely. First of all, congratulations to anybody out there who's been paying attention to cryptos. You've been smashing it for the most part. Now, here's the deal. It's just like crypto is very similar to what we experienced in 2020, where there's some haves and the have-nots, right? And even those that should be haves are getting drugged through the mud. There's two particular that I like long term. However, I'm not necessarily convinced that they're worth the risk at this point. Those two being Dash, which I love as a potential transactional coin someday, and Ripple. Both being kind of drugged through the mud from a privacy standpoint or the SEC. So want to kind of avoid those. But Bitcoin's doing amazing. Ethereum's doing amazing. Litecoin's doing amazing. Those are kind of the three core. However, they've all done amazing. And so I always think, and students know this that are in my trading room, I always think about what is next. And we're getting to a point of where a lot of institutional traders and institutional order flow has started to come into Bitcoin. And in fact, they've been getting in over the course of the last few months. And I think they're going to look at this as like, yes, we're going up higher, but let's lock in some profits and see if we can buy lower. And the reason why I'm convinced we're going down and we're going to be able to buy at a lower price is because history shows every time that we go 2, 3, 4 times above the mining cost, what it costs to actually mine a Bitcoin, we come back down to that mining level. So we're about 2.5 times higher than the current mining cost, and which means that I'm expecting about a 50% haircut in current price. Now, I don't want to hold Bitcoin and take that 50% haircut. There are some coins that I think are going to, if Bitcoin falls 50%, they're going to fall too, but they're not going to fall 50% from my standpoint. I think those coins are coins such as Basic Attention, which is BAT coin. If you look at the charts of BAT on Binance or Bittrex or Coinbase, you can see that it's actually pretty stable compared to a lot of other coins. So that's a good place to hide out in. And then another coin that I really like that I think will, again, it will come down if everything else comes down to the levels I think they're going to. I expect a 30-40% sell off. If that happens, these coins will sell off too, but I think they'll sell off less. Another coin that I like a lot is Link, which is Chainlink, and Chainlink is a great project. Guys, there's some people out there that believe and have done calculations on the adoption of Chainlink, and they think it's $1,000 coin someday. And it's a coin that's trading at 14, 15 bucks. So the potential is absolutely amazing. I actually agree. I can get on board with that. I think the opportunity in something like Chainlink long term is awesome. However, a low tide sinks all ships. I do see a pullback coming. I see a sell-off coming in some of these markets. I think that sell-off is going to provide an awesome opportunity to either get involved or to buy more coins. If you're long-term, I don't think you should be freaked out by any of this sell-off that I think is going to be coming over the course of the next few weeks.
Yeah, I absolutely believe so too. And my stand, and I know, Chris, maybe your stand is the same thing, but my stand with the cryptos right now, especially Ethereum and Bitcoin, and a lot of you know what I did last year. I waited for that pullback in Ethereum, got in at 335, bought in everything at 335, and I'm just riding this wave out. And my stance is either I'm going to make a crap load of money on those, or it's going to go face belly up and not do anything. It is what it is. I'm not really going to be focused on too many times to get in and out, but I do want to look at maybe these pullbacks that Tyson's talking about, and if the market does pull back, maybe add a little bit to the position, because my average out cost is going to be so much lower. I'd love to get in on a little bit more extra cash on these positions, especially on Bitcoin as well as Ethereum. But there are definitely some other cryptos out there that are definitely looking more attractive. We spoke about Loop Ring. Loop Ring actually has moved something like 40% overnight, which is a huge move. But those are more like high risk, high reward type of cryptos to take a look at. So it is what it is.
It's interesting, Gary. I agree 100%. I never seem to find myself in those ones that pump 100% in one day. I mean, so for me, I always have to take the longer term stance too. And I think that's actually, it's very interesting. I think cryptos are going to be super similar to the way the stock market is developed. And you look at who are the richest and the highest performing investors and traders in the world. And they're those that bought stocks in the 80s and have never sold them. And I think cryptocurrencies are going to be very similar, where you have these really hyperactive, amazing traders that can kind of do pretty good today and next week and all that. But the people who buy and just let it ride, those are the ones that are going to really, I think, in the next 3, 5, 10 years, look back and say, man, I did really well.
Sure. Yeah. Absolutely.
Absolutely. The holidays, actually, just for me on the crypto side, once I was reading up on the SEC probe for Ripple, it forced me to do a little bit of diversification in probably a good way, because I was up. So my break even, my cost basis on Ripple was 20 cents. I didn't even start getting involved in Ripple until 20 cents. Obviously I was very excited when it was up to 70, 78 cents, almost 80 cents when it topped out. And then I saw the SEC probe to start to reset it. So when I did close out my Ripple positions, I was around 28 cents, which isn't a ton. I took partial profits on the way up and let it remain to run. So I'm definitely long term. Like I have no interest in actively like buying and selling, tops and bottoms. It's like my cost basis on Bitcoin is 4,500. My cost basis on Ethereum is 250. My cost basis on Litecoin is under $100. My cost basis on Ripple is 20 cents. It's like I'm in all these great positions. So for me to say, hey, I'm going to take profit and hope to time this, maybe a dip in 2021. I mean, for me to buy Ethereum at $700, $800 versus $250, I'm just going to let it run. And I know that might be silly because, maybe it comes back down and I have all the profit. Now I'm up like 600% in my crypto portfolio. 600% could also be zero. And it could be negative. So it's stupid to think that I'm going to let that happen. But the reality was, when I first started to put money into cryptos, that was my mindset. Like, this is basically a finite amount. Here's my long-term investment. Let's see where this thing goes over the next, just like Tyson said, 5 to 10 years. I don't know, but 2020 was a pretty incredible year to see that there was a newfound interest and legitimacy. And I really think now, like, this digital talk is now starting to become way more mainstream, with institutions, even governments and central banks are starting to not deny the fact that they might be looking at some type of digital currency of some sort. It may not be Bitcoin, but some way they're going to be pricing in. I don't know how it's going to play out. I don't know if this actually affects the Forex market in the next 2 to 5 years. Maybe it does, maybe it doesn't. But needless to say, like, I think that right now I'm not going to call it a bubble. Like, maybe the price is pretty crazy, but it's like, it's not a tulip bubble where this thing turns to nothing. Like, I think that right now cryptocurrencies are here to stay, and it does make for a very exciting market and ton of opportunity. Hopefully this year we see more traction to the upside.
We've transitioned from real quick. We've transitioned from a if to a when.
Yeah.
Within the cryptocurrency, I personally, I just said, hey, I think Bitcoin is going to go down to 15 or 16,000, but I have a 2021 target of 156,000 in Bitcoin. That's where I think we're going by the end of the year. And I have this equation of how I think we're going to get there, as far as hedge funds and it taking a portion of gold's market cap and all of that. But so I think the question is if somebody's not involved, what do you? So if those that are involved, like, okay, yeah, let's kind of let our positions ride. Sure. Let's not time it. But those that aren't involved, the question is this a good time to buy? Long term, I think this is a phenomenal time to buy. But I think what you do is you can kind of leg into your positions. Maybe buy half now and look for a pullback and buy the other half at a better price. And if you miss out on that next leg higher, be disciplined enough just to buy back at that next pullback level. So I think that's the way to do it. I don't necessarily have somebody say, oh, I'm brand new to crypto. I have $10,000 to invest. I'm going to invest it all right now. Unless you for sure know you can close your eyes, plug your nose and not look at it for the next 3 to 5 years, then cool. You're good, I think.
Yeah.
There is no guarantee. But if you want to try to get a little bit of better price, maybe buy half now, look for that pullback and buy the second half at a little bit of a dip.
Yeah, absolutely. Hey guys, let's move on to the big elephant in the middle of the room right now, and that is things that are happening to this week with regards to it can change the market. We've got the Senate runoff that's taking place tomorrow. We're going to get that taking place tomorrow in Georgia. We've got the Congress counting the electoral votes. That's on the 6th. And then we've got non-farm payrolls coming out on Friday. All of this, in my opinion, is going to move the stock market. Dollar index is going to move as well. We're going to have safe currency pairs as well, Swiss, JPY, and even the euro is going to move on this as well. What is your take on positions right now? Because there's not just one currency pair that's going to move. There's multiple, which is going to affect, of course, the overall movement on pairs that it's traded against as well. What is your take right now? And I'm going to go ahead and ask Chris to get started on this discussion. What is your take this week as to what you're going to do? Are you going to take this week as let it run out, let's see what happens next week and start taking trades next week? Is this the week of just preparing yourself and getting ready for 2021? What is your take on that, Chris? And then I'll ask Tyson.
Yeah, so I've been off for the last 2 weeks, and part of me is really happy that I was, because all I did was kind of monitor my account, see what my robots were doing, but I didn't take any discretionary trades for the last couple of weeks. So I did notice that the dollar index was getting weaker over the holidays, just like I thought. It's like holiday trading is usually a one-dimensional trade. If it breaks out and it's trending, it's gonna keep trending. So the dollar kept making new lows, the euro dollar kept making new highs, the Aussie dollar kept making new highs, the New Zealand dollar kept making new highs. The dollar's getting hit really hard during those holidays. December, January are historically pretty solid transition months. I'm looking at some amazing technicals to see that the dollar we've known that it's been oversold. We've talked about it, the final weeks of the year. We know that it's oversold, but not only is it oversold, but it's also showing divergence. We also have new yearly pivots. We have new monthly pivots. We have multiple breadcrumbs that are showing at least a retracement in the dollar. Now, I'm not going to say that dollar strength means a bull market. I'm saying that dollar strength means recovery. The dollar has been hit pretty hard since August of last year and continued to stay weak. So for the first part of this year, as Gary's showing on the chart here, the dollar index, I'm just simply looking at, I am currently short Aussie dollar right now at 77.15, and I am short on the euro dollar at 22.60. So those are basically test trades, because I know that I'm not going to call the tops or the bottoms. So I'm willing to say, you know what? I think that the probability is based on good levels and time that I will have some profits to protect over the next 2 to 4 weeks. I know that we have some drama around the election. We have some drama around the Senate runoff race to see who controls, the Senate basically. And that could and probably will affect some stock market sentiment. Same thing on I talked about yearly pivots, the SPY, the Dow Jones, the Nasdaq. I mean, we're talking about the most insane year that I've seen in a long, long time to have a 30-40% sell-off in the COVID spiral and then have a 40-50-60% rally from those V bottoms in March. And you're talking about again continuing an 11 to 12 year bull run, like with no end in sight, the kitchen sink approach, all these crazy financially engineered accommodations to keep the market running and keep the market running hot, but the economy is not. And so it's like, I just think 2021 at least is going to be a punch in the mouth to just put it into a little bit of reality. And this is the problem is like, I think it's healthy to have a pullback. It's healthy to have a correction, right? But the problem is we don't have healthy corrections and pullbacks now. We have like panic corrections and panic pullbacks. And it's like as soon as we have, let's say that this week for some reason the market sells off like 6 or 7%. Well, what's going to happen is everyone's going to look to the Fed to like all of a sudden step up and say something about like what are you going to do to reassure us that the market won't crash? It's like this boom and bust cycle is so frustrating, and that's what annoyed me last year. It's like, how do we keep doing this? How do we keep looking for the Fed as a safety net when in reality it's like, look, we need to have better unemployment numbers. We need to have better jobs. And going into this week with non-farm payroll, it's like, look, the Fed's going to be a big factor in why the stock market still has growth, why the stock market's still looking to keep maybe churning higher. But from a technical standpoint, I think maybe the catalyst is what Gary's talking about. The catalyst is the election. Maybe there's additional opposition coming. Maybe there's more contention over the next couple of weeks. As we know, it's like January 20th is supposed to be when Biden is sworn in. But if we have, Republicans right now that are wanting to say like it's not official or there's more, I don't know, just call it shenanigans, whatever, call it drama. If there's more drama around the election, it's going to create uncertainty. That's bad for the stock market. But sitting at 12-year highs, sitting at crazy overextended conditions, we can talk about fundamentals all day long, but the reality is, look, I look back at this last year, like Tyson and Gary and I were talking about this before we started today. Last year was insane. And it was insane in a good way as an investor. It was insane in a bad way for those that missed out. It was insane in a bad way for pretty much the reality socially what happened around the world. But it's like as an investor, it was an incredibly like lesson filled year. And if you had a great year, super happy for everybody. If you had a bad year or didn't know what to do last year, then learn from it and then get ready and be excited for 2021. So from the technical side, I'm super excited about where things are at right now. I think for my first month, I'm focused on dollar strength, at least for a recovery. And part of that's because it's the time of year where we have highs and lows that are forming, transitions in the markets, and the dollar was hit pretty darn hard where it's like the worst run the dollar's had in like 3+ years. It's at the weakest spot we've seen since 2015-16. So again, I'm not saying the dollar is going to be bullish. I'm just saying it's a recovery that's needed, and this is why I love Forex. Is we might have overextended conditions in Forex, but it finds an amazing way of balancing and working itself out. So I like Euro dollar short. I like Aussie dollar short. I like New Zealand dollar short. I'm liking a little bit of dollar strength right now. And from a technical standpoint, yearly pivots are my favorite thing. I'm going to talk about that all this week in my flex trading room. I think they line up amazingly well for all these levels we're talking about. Buying dips on cryptos, looking for corrections in stock markets, looking for recovery in the US dollar. They line up really, really well. So Gary, I know you can talk about this as well with target trading this week.
Yep, absolutely, and that's it's a good conversation. We'll definitely jump into the pivot points right after Tyson. Maybe you want to add some of your insights what you're going to do this year.
100%,
especially this week. Sorry.
Yeah, 100% of what Chris said as far as where he's at. Same thing with the dollar, same thing with the market. And what we've got to understand is that if the market sells off, first of all, to insure your portfolio right now, I just looked at a put going out to June on the S&P 500 at the money put. You can insure your portfolio for about 6%. Mm-hmm. You might think, oh man, that's a lot of money. Well, what's the probability of the markets falling 6% between now and June? I think it's fairly high. Why? Because of all of the unknowns, because of all the euphoria. The other thing is I always look for And what I was going to say is, so if the market does fall a little bit, I'm not saying it's a crash, but if it does fall, where does that money go to? If I have $100,000 worth of Apple that I own, I'm not selling it for toothpicks or I'm selling it for dollars. So I'm raising dollars. So it puts a natural bid under the dollar. And so we have to understand that. But what's interesting is supposedly checks are starting to show up into bank accounts from stimulus. A little bit interesting because the last time checks started to show up in bank accounts, the stock market went absolutely crazy.
Yeah.
In a bull run, because that money started to flood into the market because people hadn't really felt the pain yet, all that much pain yet of they were starting to get the idea of the pain, but it was in late March and April, and it started to flood into the markets, and the markets rallied up. Well, what are we seeing this time? Checks are starting to show up, and we're seeing a sell-off.
Mm-hmm.
Are people holding this cash, maybe looking for better opportunities, or are they holding it because things are really not that great and they're like, dude, I kind of need this money? So long story short, I'm with Chris. I like looking for opportunities in the dollar. My favorite position over the course of the next 3 to 6 months is in the dollar Swiss. I think the dollar Swiss is absolutely due for an amazing run. My target on the dollar Swiss in 2021 could happen in the next 2 months or the next 12 months is the high of 2020. I think we're gonna go back up to the 2020 highs. But dollar Swiss, I like Aussie dollar short. I like the euro dollar short. I like the dollar CAD long. I think there's a lot of opportunities, but again, you got to be strategic about it. And if the dollar continues to sell off, it's got to create a floor one of these times. We've went into this big kind of almost a straight line move. We are going to create a floor. Now, is that the absolute floor? I don't know. But the reason why I know we're going to create a floor soon is because there's a bunch of people who already sold. And whoever already sold, they have profits in place. And so they're going to get to a point where they say, okay, you know what? I have more risk of holding these profits than I do by locking in my profits and selling higher. So I think we're at least due for a retracement in the dollar. We may end up going much, much lower when it's all said and done, but I like buying the dollar. I like looking for opportunities to either. I'm not a big fan of selling the stock market, but protecting your portfolio, finding those stocks that you like, and then buying them at lower prices, I think is the way to go.
All right, good. Well, let me go ahead and just add to this as well, because first thing, number one, like Chris said, fundamentals are, I mean, you could bounce around fundamentals. I've been doing this for a long time, and doing the one thing that I've learned through this whole process is to not allow the fundamentals to change your perspective of how you're going to trade the market based on technicals, because the technicals are really, if you really go into the details of the technicals can tell you that there's something coming up. We can then go ahead and line it up with a fundamental, like, for instance, typical what Chris is looking at in Tyson, looking at possible dollar strength. Why is that happening? Well, if you actually go to the market and take a look at all the dollar crosses and look at how it's set up against the other quoted pair, you'll see that there is a very clear correlation between all of them. And I'm going to go to it, and I'm going to show you right now what the technicals look like, because it's really interesting when you actually look at the technicals. Now, another thing as well is, with everything happening right now, with the U.S. elections, with jobs coming out this week, we all have to go ahead and say, hey, this is the possibility of what could move the market, but how's the market going to move? Then we go back to the technicals and look at the technicals, and the technicals can tell you exactly what you're anticipating. Look here, we can never always be right, but we can definitely anticipate what price is going to do based on what's coming up right here. Now, this is where, and I've been talking about this the whole of last year in December. We actually went through this quite a few times, and I said to traders, watch out for the U.S. election, right? That's going to ultimately move the market, and we haven't had the result. Well, we've had temporary results coming up right here that they haven't finalized yet. But as all of this starts coming up, we're still monitoring the dollar index, and we said that the dollar index should be moving. But the question is when. So the when is going to be revealed in the actual technicals. Take a look at this, and you'll see exactly what I'm talking about right here. Let's go take a look at the charts. Now, and Chris and Tyson will, as we go along this, just go ahead and comment if you need to go ahead and add on. That's fine. But take a look over here. Here we have the U.S. dollar CAD. Now, before I get into the U.S. dollar CAD, I'm going to come back to it. Here's the dollar index. Now, if you look at the dollar index chart right here, it doesn't make a lot of sense. It's just like, okay, we've got the big fall. We're probably looking for a retracement. But the details are in, the devil's in the details right here. if I go ahead and put in the actual charts right here, notice that we've got a wave 1, 2, 3 down here, 4 up here, and 5 down here at the 127. So we're actually looking, the reason why we're looking for a correction move in the dollar is because it's completed a 5-wave sequence. Now, if you know anything about Elliott wave gives you very good turning points in the market and to anticipate what the turning points are going to be like. Now, here we have a possible 5-wave move. Now, what's real interesting, and Chris is going to talk about this in a moment, but take a look at the yearly pivot that's set up for this year. It's all the way up here. Now, if you can't see it, let me go ahead and make a mark there so you can see. Here it is, right here. That's the yearly pivot right there. So we're expecting price to move up. Now, the interesting part is when the market completes a fifth wave structure, it normally chases after the 4th wave retracement move. And the 4th wave retracement move is all the way up here. So we have almost like a double whammy indicating that price is going to work its way back up towards this level right here. And then just like Chris is saying, he's looking for a temporary rally in the dollar. And yes, absolutely, temporary rally in the dollar, and then what's going to happen is we're going to start seeing price moving back down. What's going to move price back down again? What's going to sell off the dollar again? Well, we'll have to wait and see what happens when that time comes. But as we get into that point, we'll then look at the details with regards to sort of data, news reports, any sort of fundamentals that are coming out that could affect the dollar itself, and then we'll know exactly how that works. Now, check this out. We're not done yet. All right, this is the dollar index. Now, look how this all lines up with the rest. Now, I'm going to go to the US dollar CAD. I've been buying US dollar CAD since December, and I've been added onto this position because of this reason. Take a look at this wave structure once again. We have a wave structure right here. We have an inside wave structure right here. We've completed a 5th wave down here at the 127. Price has gone ahead and just touched that right there, and we're looking for price to move back up. In fact, with price trading below that level of support there, is actually created a nice bit of divergence here, bullish divergence. So now we're looking for price on the US dollar CAD to rally up to around about, well, the 4th wave. If that's the 4th wave, it's going to be at 34.23. Now, if you're a person that writes numbers down, write this down. US dollar CAD chasing after 1.3423. All right, there it is there. Let's go to the pair that Chris is looking at. Look at the Aussie US dollar. If we go to Aussie US dollar right here, open this up. Notice that we've got the exact same thing lined up over here. Let me just move that across. The exact same thing here. Price has gone and moved to a 5th wave. This is where we're expecting that 5th wave to be at, right here at the 127. We've come right to it. I mean, we're virtually a few pips away from that, but we've come right to the 127. So there is an anticipation of a possible downside move in Aussie US dollar. And so if we're looking for an Aussie US dollar move, take a look at the oscillator. Again, nice bit of divergence here indicating price is going to drop back down south. So US dollar. So you can see this correlation between the news, the technicals, and then of course anticipating what dollar index is looking to do and how it lines up with the cross pairs that it's traded again as well. And I can go through almost every single dollar. I'm not going to go through every one, but you should do the homework yourself. Here's the US dollar, the euro trading against the US dollar. Same thing right here. Price come up to the 5th wave right here. We're anticipating a turnaround and a head back down south again. This price could move all the way down below 1.16. So there's another level. So now we know where the turning point is. We know the direction, and now we know where price is going to move to around about 1.16. And so as we continue to monitor these type of movements, we know that, now we're lining up with fundamentals, with technicals, and we got sort of like levels where we can anticipate price to move to. So what's important about what I've just said right now is, and Chris and Tyson will confirm this as well, is every trader needs direction, right? You need to start off with direction first. Once you establish direction, then you have to decide on how you're going to trade that. Now, there's multiple ways. If you're getting to Chris's trading room, getting to Tyson's trading room, and my trading room, we speak about those different ways of how to trade those setups. You can get direction on the daily time frame, but the problem is, how do I trade it? because that's the details, or the devil in the details, or the details in the devil, whatever it is you want to go and say. But that's the details that you need to go ahead and identify, is how you trade it. Is it going to be a 15-minute time frame, 1 hour time frame? Do I do London breakout trades based on pound crosses against the dollar, or pound against the dollar? Do I trade a swing trade using sort of a swing trade based system? Do I use automation? Do I not use automation? Do I manually trade? All of those questions that you may have is going to be ultimately answered with inside the trading room. So listen here, guys, we had some great success in all our trading rooms in 2020. There's traders that made great pips, that really done really well, and we're excited about 2021. But it's very important that you understand that these details that we're talking about right here are important. Direction, absolutely important. We haven't got the time to go through each and every trade as we go through the week to talk about the actual trading opportunities that are presenting itself every single week. Getting to the trading rooms, it's definitely going to be a good place to be in 2021. Now, getting to the next topic of the conversation, pivot points. Chris, let's go talk about pivot points. I know Tyson also talks about pivot points. I love pivot points. So we're all on the same page with regards to pivot points. What are the pairs that you focus on this time round on pivot points, Chris, that traders need to pay attention to?
Yeah, I mean, it's funny because when you look at the technical picture, if you like Fibonacci's, if you like support resistance, so I'm going to keep my analysis really clean and simple. If I'm looking at identifying support resistance levels and trendline breaks, that's essentially what gives me my really clean directional bias. So for those dollar pairs, the reason I'm starting to participate is I look at those multiple pivots. Like, it's one thing to have like a pivot just for the given week or the month or this year, but the fact that we have, these dollar index, euro dollar, Aussie dollar, New Zealand dollar, pound, like all these dollar pairs have an available yearly pivot that shows in order to hit it, it's going to have to see dollar strength. So we have a pivot available. We have oversold, overbought conditions on most of the dollar crosses. We're looking to see, and this is why I'm starting to get the analysis ready right now, is that a simple trend line break to go with that euro dollar chart that Gary's showing, like a simple trend line break right there off the lows means I'm on the right side of the trend line. I'm going to start looking to build my positions to short the euro dollar. And in levels that I would say conservatively, I would take it down for current levels. I would sell it. I'm now around 2260. I'd like to sell it down to like 1.20. That's last year's high. So I guess I should say that the previous highs, previous resistance. So that's a conservative target. But I also look back to where we had those levels around 1700 and 1600 when we had that major breakout point that became support. So can we come back and retest that level? I certainly hope so. So between 1.20, 1.16, that's my window of I'll be protecting profits as long as I'm selling the euro dollar at current levels or slightly higher. Wait for a nice little trend line. This is what I'll do this week in the trading room is a trend line break, Gary, means I've got better confirmation. I can start building those little positions around it and then managing profits on the way down, protecting profits, anything below 1.20 or beyond. I'm going to start protecting those profits. So I love the pivot. It lines up beautifully with previous structure. That's what's pretty amazing is like last year's low and high. It's like if you just drag a Fibonacci on a lot of your swings, you're going to notice that this year's pivot is sitting around like a 38% level, a 50% level. Like some of these big Fibonacci levels happen to coincide really nicely with those yearly pivots. So that's what I'm using, and primarily my favorite ones. Dollar index looks great, and then the major U.S. indices. I'm looking at the SPY. For the S&P 500, the Dow Jones, the Nasdaq, all of them are sitting around like 30 to 38% pullback levels. And again, from the low of March of 2020 to the high for the rest of the year, this incredible rally. I mean, I just not that I'm saying the stock market can't go higher, but it's like we have to have some type of breath. We have to have some type of hesitation, maybe a pullback. And I think there's enough political drama going on right now for at least the first few weeks of this year to start putting the market in. Like I said, it's that little rattle, it's that little punch in the mouth to start the year off where it's like, and again, it's not going to rattle investors. Like if we truly get back to a normal economy where we were, booming in 2019 and booming, so we thought going into 2020, if we get back to those levels where everybody's doing well and the global economy truly recovers, then sure, let's have higher highs in the stock market. But when we don't have that going on, economically speaking, like all we're doing is financially faking it. Like we're faking these new highs. We're artificially inflating these new highs. And I think that's where traders have to make sure that they're very protective because those gains can go to zero. Like all the gains from 2020 can evaporate, and it wouldn't make any sense, but it can actually happen. So I'm just, again, plan for the best, prepare for the worst. Technicals, I think Gary put it really well. Technicals are what's going to help you anticipate a lot of these trades. And the fuel is going to be the fundamentals. The fuel is going to be the price action. The confirmation is going to be the price action. So I'm ready to see dollar strength, but I'm also looking for dollar index and price action to support why I'm going to build these positions. So anything I'm in right now is a tester trade. It's a participation trade because I think, look, I'm happy that I wasn't paying attention the last couple of weeks. I just let the dollar pairs drift. I'm happy that I got some entries today because I looked at price when I was doing my analysis. I'm like, this is awesome. Like this is a great price. The dollar's barely budged. I'm going to take a test right here. So it's a small position, starting my little building up. And then once we have better confirmation, I'll step on the gas, I'll add to my winning positions and manage some profit. So it's the same process, which is why I love trading. You do the same thing over and over. You learn from your strengths, learn from your weaknesses and the lessons that trading gives us every single year, and we just continue to trade.
So I think 2021, I agree 100%. I think it could be the easiest trading year to start out ever. Because I look at this. I want you guys to think about this. I think almost every asset class out there, whether it's the stock market, even cryptocurrencies, they don't have weekly closes, but you could take like the last 7 days of price action, rolling in after last week or into last Friday. The last week of the year, I think you could look at any asset class, any currency, and let's take the pound dollar as an example, or the euro dollar as an example. We get a daily close below last week's low. You sell and you sell down to the yearly pivot. And I think you can do that with every asset. I think in the dollar CAD, you look at last week's high, you get a daily close above last week's high, you buy up to the daily pivot. And I think honestly, you could take almost any asset class and simply look at last week's high or low. You buy or sell based upon the direction of the pivot. You buy or sell in that direction when we close below those levels or above those levels on a daily bar, and you just ride it to that pivot. I think in the next 2 or 3 months, that's going to provide amazing profitability, and it's super simple if you do it right.
Yep. Just pure price action. Good stuff.
Yep, absolutely. All right, good. Let's go ahead and close off on your projections as to what's going to happen on Friday, non-farm payroll. If I go ahead and take a look at the numbers here, let's just take a look at the calendar. What is the projection? They're looking at non-farm payrolls. These are a couple of things that I always look at: average earnings. I look at the average hourly earnings. I look at the non-farm payroll employment change, but more importantly, the unemployment rate. Now we know what happened with COVID. We know there's going to be a lot of jobs lost, and hopefully some jobs recovered as we move into better times or better conditions. We know that there are definitely some spikes in COVID-19. That's a conversation on another day. But if we take a look at the details right here on Friday, they're projecting the unemployment rate to be at 6.9% from the 6.7%. So that is actually an increase from the previous. And then we're looking at the average earnings. That's going to be dropping down to 0.2%. So numbers aren't looking good. We've got non-farm employment change. That's going to be at 75K compared to the 245K. Definitely not good numbers coming out for the U.S. How's that going to change your influence? How's that going to influence your decision based on your dollar bullish position that you're looking at, Chris and Tyson?
I would not be surprised to see this news on Friday actually help either, get this move started if we have some surprise, bullish news on the dollar, or to actually solidify some of those buy the rumor, sell the fact lows and highs that we're looking for. We've seen let's say a bad print on the dollar on Friday makes the euro dollar go higher. Okay, fine. Well, if it's an inefficient move higher, I'm probably going to fade that move back down. It's not going to change my long-term horizon when I'm looking at daily and weekly charts that are overbought and divergent and line up really beautifully. I'm just looking for the price action to confirm it. So I think this week's news, again, first full trading week of the year after 2 interrupted weeks with holidays. Again, we have FOMC minutes on Wednesday. We have non-farm payroll on Friday. The job numbers were awful in December. And projecting a 75K, I mean, that's a really low bar in my opinion set for the dollar. So it's like if we somehow can find a way to make a 6-figure print, like hey, we did 150K, it's like, well, that's better than expectations. So, I mean, there's a
Sure.
long ways to go to recover. I mean, the U.S., I think, has lost 8 million jobs or something still. Like, ever since March of last year, we had 20 some million unemployed, partially employed, furloughed, whatever it is. Now it's like we have 8 or 9 million still unemployed. The claims are incredibly high every single week. But again, as far as price action, if we see it be a positive print for the dollar that supports bullish price action, now I'm starting to look for those trend line breaks and that evidence to start favoring dollar movement. If it's a another push against the dollar with dollar weakness, I think that's what kind of helps us solidify those tops and bottoms. Again, waiting for price action to support it so I can start positioning myself for dollar strength. That's really my for the next probably 2 to 4 weeks. That's going to be my focus. I think to start things off, that's my best alignment out there, like basket wise in Forex. The dollar basket lines up beautifully. I don't see a lot that lines up that cleanly. The dollar index looks great to me.
All right,
I
cool.
agree. I don't think
Tyson?
there's any. I don't think there's anything in the number that could change my stance unless it comes in at like negative 150, 200,000.
Right.
Then that's like the Fed panicking, and
Right.
that's a big deal. Don't see that happening. So unless even if it comes in well below expectations, I think it's priced in.
Sure.
Yeah. I think if there's anything going to happen on Friday, between now and Friday, I think if there's anything going to be dollar weakness, it's going to be a spike. It's not going to be a long-term move. It's going to be a short-term spike, maybe even just an intraday spike, and then I think a continuation of bullish dollar. I'm taking everything, all the fundamentals out of the equation. I'm just looking at it's just technically based, and I think the technicals eventually going to drive the market in that direction. So I'm going to be on the same page that and say, if anything, might be a daily spike, but anything other than that would be just in a bullish dollar on the pair. So I've got the same stance as you guys. Okay, guys, I think that's about it for us today. Do appreciate. Let me see if there's a couple of questions right here. Hold back. Don't see anything. Jason had a question here. Do you use pivots and risk too much per trade and trade several pairs and level in 10 to 12 times? You will get. I don't know what he said. You can only risk 1% on per trade.
He's basically saying don't
just use good equity management.
Don't
Yeah.
Don't get
That's
into
the
many
bottom line.
positions.
Yeah. You got.
Absolutely.
I mean, it's timing. So look, pivots have been a big part of my trading career for the last 8-9 years. I've just become more and more patient on when to start leveling myself in. A lot of times I'm just like, I won't even start leveling towards pivots until we see extremes like we have right now. Like I'm excited. I could have easily started shorting the euro dollar at 2100, 2200, 2000 even. I could have started hold, but it's like, look, I'll just wait. It's like we had a pretty good outlook to think dollar weakness, and we had it, and it was like the one trend of Q4 last year. So I just I mean the longer we stay in these markets, the more the market starts to show you like what it does over and over again. So you just start to be a little bit more patient on, instead of you trying to call tops and bottoms, wait for a trend line break. Instead of you waiting for a top or bottom, look for oversold, overbought conditions with divergence. Like those are really good technical alignments that play out a lot. And I also lower my expectation. Instead of going after a 500 pip target, I'm like, look, if I can get a decent direction and have it go 200 or 300 pips in my favor, I'll probably just protect my profit rather than saying it's got to go all the way to yeah. And that's what Jason was saying. It's just small trade sizes. Yep.
You don't want to be forced out of a position only to watch it go the direction into where you thought it was going to go, and you knew it was going to go there, but you were forced out.
Yep. And I did say one thing. I was almost looking for the holidays to provide, and I don't recall actually seeing one outside of maybe like an aggressive move with Bernanke back in the day, but a dollar flash crash. I almost thought during the holidays we were going to get a dollar flash crash because the dollar was so weak that I was like, I wouldn't be surprised to see us just flush out all the dollar movements, highs and lows create, and then we start off this year after a flash crash. Fortunately, we haven't seen one yet. I'm not saying we can't. Like maybe there's, like we said, political drama that creates that. But dollar's also a very liquid basket. I would hope to think that's not going to happen. I think Forex traders are probably exhausted from flash crashes because we've certainly had a lot over the last 5 years. But that being said, it's all about trade size and equity management, and we proceed to trade accordingly.
Now, on that point, if you have not heard of target trading max, that's what Chris and Tyson are talking about with regards to pivots and how to trade pivots in that. We have a target trading max course that's out there that we actually did pretty well. Check this out, guys. we actually moved in December. We moved to daily pivots, and we traded daily pivots just because of the way the markets were trading over December. We turned a 10.3% in a real life trading account, 10.3% in a real life trading account, and it was based on daily targets. And so the most important thing right here is you have to understand is that we have different ways to trade these pivot points. In the Target Trading Max course, we teach you about the different ways to trade it, and also how to be able to use lot multiplier if you want to get in and out of the market quicker and grab quick profits without sitting into long-term positions. We talk about that in the Target Trading Max course.
Hey,
guys, thank
go
you
back
very
to
much
that
for coming
performance
in.
if you can, real quick. I just want to see this. So, because you got not only 10%, but the run that you're on in the last 4 or 5 months is pretty stellar, Gary.
Yeah.
I mean, that is absolutely phenomenal. Congratulations on that.
Yeah, appreciate that. Yeah, it's actually been absolutely one of the and just like to Chris, man, I've been a pivot point trader for a long time, and the one thing that we see over and over and over again is that the markets have different trading environments that require us to identify it and then trade towards different types of targets with different types of strategies. When you can apply that to the market, you can make profit from pivot points. Absolutely.
Mm-hmm.
All right, guys. Appreciate your time. Thank you, Chris, for your input. And Tyson, always good to have you guys here. We'll be back again next week, Monday. We may be changing the time around a little bit. I'm not 100% certain, but we'll let you know as soon as that happens. But with everyone, a happy new year from market traders, a prosperous 2021, and we'll see you next week. Thank you.